What's up, RegTech fans? Let's talk about some stocks today, particularly the Ziprecruiter stock, currently trading at a little under 15 bucks a share, and it's starting to make some moves again after hitting a low of 10 bucks back in October of last year, and the previous high was around I think 23 from a year ago. But the last so far this year, actually stocks climbed from 13.5 to almost 15. But the folks over at Seeking Alpha have a pretty large, or deep analysis of the ZipRecruiter stock. I want to kind of walk you through it. I thought it was interesting in terms of just how big job boards are like when it comes to stocks. And this guy, Gitis Z's, hope I'm pronouncing that right, did a really deep dive here on the ZipRecruiter stock, which I think is just ZIP, and it's on, I think it's on the NASDAQ, if I'm not mistaken. Anyway, let's go to the article. They've got some significant declines in its top line revenues, but they've managed to improve its bottom line through cost cutting measures and technology improvements, it says. Of course, the decline in revenues is due to a lack of job openings, not a lack of job seekers. And the company will have to wait for the macro environment to improve before seeing a turnaround. So, yeah, that's correct. So, job boards they rise and fall with the job market. If you're going to buy a stock like this, then you need to expect that. So, by the way, this is not stock advice. So, I'm just going to want to run through what this analyst talks about here about Zip. Let's see. Since he last covered the company back in May of last year, stock price tumbled down below his previous targets of $12.50 a share. Here's a good passage here. As of Q4 23, the company had around $500 million in cash and marketable securities against around $540 million in long-term debt, which hasn't changed since fiscal year 22. He writes, I don't think that the debt is of any risk to the company. Still, however, it's a little under my requirement of an interest coverage ratio of at least 5, as it is standing now at around 3. Debt to asset ratio is around 0.9, which is also a little too high. So they do have some debt there that they're looking at. The company is looking to do around $128 million for Q4 of 23, which is around 40% decline from the same period last year. Yeah. At their height, ZipRecruiter was approaching $1 billion company, but that was back in 22. It seems the company is having a lot of trouble with its top line growth, and that is worrisome. Continuing with efficiency and profitability, unsurprisingly, the improvements to the bottom line saw improvements in the company's ROA and ROE numbers. Not sure what those mean. Shareholder equity was negative at the end of Q3. What's happening to revenues? So Q1 saw minus 19%, Q2 was minus 29%, and Q3 minus 31%. And the company expects to make around 40% less, as he mentioned above. Clearly, the company's been feeling the economic downturn of 23, where there may be a lot of people looking for jobs. They said in the first quarter results that was over 40% growth in organic job seeker traffic. So they're getting a lot more job seekers because of this. And that makes sense. The unemployment rate as of December stood at around 3.7%, which means that there is still going to be a lot of uncertainty regarding the company's revenues, as companies are not going to be in a hurry to hire anyone new. I think that's pretty spot on for this year. It's going to be very much just a flat year, I think, in terms of just job growth overall. Here's comments on the outlook. I would like to see the company's resiliency continuing concerning margins. The management did a commendable job, as even with much lower revenues, the company managed to keep costs down and improve its bottom line over the last 3 quarters. As long as the company manages to weather the uncertainty, I expect the bottom line to improve further, and that's just the cherry on top. When not only do the margins improve, which, as I said, drive the value of the company, but also top line growth rejuvenates. In Q3, the company saw organic visits growth of around 46% year over year, which marks a third quarter of 40% year over year growth. It seems the company's ecosystem is very attractive to job seekers, with the AI assistant Phil playing a huge role in making the whole process much less boring and more informal and relaxed. So I think in that sense, the company's doing everything right. When it comes to hiring, many companies are taking a wait and see approach. This means that the mass layoffs of last year are being replaced with a slow and steady layoff pattern. This to me signals that the companies are not scrambling to cut people any longer in panic as they did last year, which means that over the next couple of quarters, we may still see this softness in the availability of openings. However, once the company becomes more certain and interest rates start to come down, companies will return to growth, and Zip is going to be ready once their services are in high demand once again. In short, the company will have to sit tight and wait till the macro environment starts to improve, which means it will have to wait for rate cuts and more certainty so that companies start to hire again. And once they do, there are a lot of willing candidates waiting on the app who will be more than happy to take that role. Yeah, so now it's kind of a good time for ZipRecruiter just to collect more candidates and prime up the alerts and traffic that they have going around that. That's kind of the benefit of a downturn here in hiring. In terms of competition, the company is in a highly fragmented market, very well-known players like LinkedIn, Career Builder, Glassdoor, and Indeed. There's a few more established players in the field. So the company needs to offer value to retain customers and attract new ones in order to survive and come out on top as the most reliable recruitment platform out there. Yeah, I would agree. I would love to see ZipRecruiter add more features and do some more innovation here around their product. They've been very static lately, and I think you have to keep up with the Joneses there. So he says if you manage to get into the low scene at the end of October, congratulations, that's a good price to hold and wait for the company's eventual recovery there. So I'll throw a link to the article in the show notes here. But a nice deep dive here on the ZipRecruiter stock. More pain ahead, but the company will come back, according to this analyst. Thanks for watching.